Prasun Gajri, Chief Investment Officer with HDFC Life Insurance Company, joins us. Prasun, good morning. Thank you for joining us. Markets are up for 10 days on the trot now. Do you think the recent leg of price action is justified, or markets are looking overextended and some degree of complacency has kicked in?
Very difficult to say actually. I mean, clearly, what are the markets building in? Markets are probably building in some sort of a macro recovery, which is a given, which you have seen in a lot of parameters, and markets are expecting that to continue and build upon that, which may be a little bit early, but I think that trend is likely to continue throughout the year. Second, market is building in a stable and a decisive government to come in, and that remains to be seen. So clearly from that perspective, it may be a little bit premature, but I don't think this is just a pre-election rally. So I think one has to really be clear that a part of this rally is also being led by the fact that we have seen a macro improvement, and what has happened is markets have definitely risen, but more than that, I think there's a lot of sector rotation which has happened in the market. So whatever was beaten down, wherever the valuations were very cheap, has come up purely because of the macro improvement. I think that trend can continue to play out. I think the pace of market rise could definitely ease off. As we get closer to the elections, we could even see a little bit jitteriness creeping into the markets in the short run. But that is going to be the typical case as we approach the elections.
Prasun, hi, morning. The BJP started to declare its election manifesto over the weekend. Do you foresee any tilt towards any particular sector?
Well, I guess the expectations are pretty clear that this will be, the manifesto will focus much more on infrastructure and reviving capex. I think these are the two things markets are hoping for. And if that is the part of the manifesto, I think markets are going to be pretty inclined positively towards that. The only catch here is that even if that is a part of the manifesto, and even if BJP comes to power, it is going to take a while before that can be put in action on the ground. And therefore, one would see a little bit of disappointment, which could come through some part of the year going forward, where markets would be probably in a hurry to see some action, but it is going to take some time for that action to really emerge. At that point of time, I think markets could be a little bit volatile, but overall trends, if that is what the manifesto is and that is exactly what the government market gets, I think the overall from a 12-18 month perspective, I would remain positive on the markets.
Prasun, what are the stocks that you like when it comes to the cap goods space, and is L&T a name that you would bet on?
Well, I would not want to get into individual stocks. As for L&T, clearly one would have to bet on it because the fact remains that there are very limited choices in the cap goods space, especially if you're looking for a large liquid name where you want a fairly large quantity in a portfolio. I think L&T is probably the only stock which really qualifies under that criteria. But apart from that, one would continue to look for niche spaces where the valuations are cheap, balance sheets are okay, and where we believe the earnings growth will start coming through in the next 12 to 24 months. So I think it's going to be hard work. One will have to be choosy. One will have to really work on a stock-specific basis to get at. I really don't want to get into individual names which we are looking at the moment.
Do you think a new bull market has started for India? Technically, surely it's looking like that.
It's a nomenclature, whichever way you want to look at it. New bull market has started, maybe it has. No, the way I look at the market is that this is, to me, a market, if we get the kind of government market is expecting. I think that is something which has to happen because we require a stable, decisive government which can take policy decisions and get the capex cycle back on track. I think that is important because without investments happening in this country, growth is not going to come back, and if growth doesn't come back, then everything else will not fall into place. So assuming that happens, I would say that the bull market will be in place. Very clearly, I do see over the next 24 to 36 months an upward trending market with, yes, bouts of volatility, with bouts of correction which will happen. It's never going to be a straight line. But I do sense a move out of almost a 6-year consolidation which we have seen. And I do sense that we are in for a good positive equity markets over the next 24 to 36 months, provided the caveats which I mentioned go through.
Prasun, what is your view on the entire telecom space? Yesterday we had CLSA upgrading Bharti. Today Relcom is giving you a very good move, perhaps on the Relgio, deal news or so. And Idea as well has been holding out.
Yeah, we are positive on the space, pretty much for the well-known reasons. We do see an uptick in the ARPUs for these companies, both on the voice, and we do see data becoming a bigger and bigger contributing factor to the overall revenue, and thus also increasing the ARPUs. And also the fact that a lot of regulatory uncertainty is behind these companies. This sector has not participated in the rally at all. Very clearly, while we do see the earnings being fairly strong for the next 12 to 18 months. So from that perspective, we are positive on the telecom space.
But are you not worried about stretched balance sheet, new entrants, still no clarity on pricing power? They are big issues.
Well, clearly they are. So therefore, one has to really pick and choose which stocks you want to play. So I'm not saying that everything is hunky-dory with all the companies in the sector. But I do believe there are companies available where, despite the balance sheets being in a little bit of a stretch at the moment, the cash flows would be reasonably good to be able to manage the trouble on the balance sheet. And also I am reasonably confident that we will see tariff hikes coming through, both directly and indirectly. And the data will start contributing a bigger and bigger part of the revenue, and that is positive. So if one were to look at pure earnings growth, I think the sector is not going to disappoint. And that is a good enough reason for one to be positive at the moment on this sector.
So, in your last declared portfolio, what are some of the key acquisitions? Give me a flavor of how much cyclicals do you own, what is your exposure to defensives, and how much banks do you own?
Well, we are kind of neutral on banks. We continue to be underweight IT at the moment, marginally overweight on pharma. So by and IT and pharma put together will be more or less neutral. FMCG we continue to be underweight for a while, and that position continues. Marginal overweight on some of the cap goods names and oil and gas names, as well as cement names. So that is pretty much the portfolio positioning. Banking, within the insurance space, you cannot really go beyond 25%, so that remains a limit for us. So I think we have to play within those rules. So therefore it's neutralish to marginal underweight position on that count.
Prasun, talk a little bit more about in detail as to how you're approaching the auto pack. While the auto index made a life high yesterday, the monthly sales data hasn't been all that supportive this time.
We are not very positive on the auto pack, to be honest. I think will be a stock specific. Certain stocks one may be positive on. If I have to look at the auto stocks as a whole, as a package, and the weight and the benchmarks, overall we'll remain underweight on the sector. The numbers have not been panning out, and I do not see a traction coming through over the next 6 months either. We have seen that the excise duty cuts have not really managed to tilt the scales in any manner possible. Especially on two-wheelers, we are seeing a number of companies really struggling in the listed space, really struggling to deliver. The inventory levels are pretty high. So I would be cautious of this sector in the short run. But clearly, these companies are pretty good companies with great balance sheets, no major problems otherwise. So even if the correction happens, it's not going to be very major correction in any of these names. So from that perspective, it's not a big risk to run positions on the auto sector. But my sense is the auto sector could end up underperforming the markets, especially if the markets really run up. And that has been happening actually for a while now.
Prasun, I met a senior fund manager yesterday and he told me something which sort of has stayed with me, and his analysis was that I'm not too bullish on cyclicals because India currently has a lot of overcapacity. For overcapacity to get utilized, demand has to come back. For demand has to come back, investments has to pick up, and investments will not pick up because currently government is very tight on the fiscal deficit. So irrespective of the new government, the consumption demand will remain strong and investment demand will not come back.
Well, depends on what time frame we are looking at. I don't see investment demand picking up definitely within this calendar year in any meaningful manner. Even if the government comes, takes some actions, gets executive decisions going, does a number of things, I think the demand in real terms is only a 2015 story. So from that perspective, I agree. But I think the market is going to price in it much earlier than if the right policy decisions are taken. Market is not going to wait for actual demand to come back. Market is going to price it much earlier. As for consumption, I don't see consumption demand remaining very strong. I think we have already seen a slowdown in consumption. And our view is that the consumption demand could remain muted for a while. It's all relative. It's a question of what a good consumption demand is. There was a time when most FMCG space was growing at in double-digit volume terms. Now I think it's more like 5 to 6% kind of volume. So I don't think that 5 to 6% is going to become 10-12% anytime soon. In fact, it could kind of slow down a little bit further from these levels over the next 6 months. So on consumption, while consumption is a good long-term story in India, I think on a relative basis, consumption could continue to be a worry. And in case right policy decisions are taken, the investment, while it may not happen, the market will price that in much faster than people anticipate. And therefore, it is not a time, as when we talked last time as well, not a time to be overly defensive. I think it's a time to have a more balanced portfolio, and depending on your choice, how much positive you want to be on cyclicals you can be, but definitely do not be not to be very underweight on cyclicals at all. That is my view at the moment.
So how much downside risk would you assign to the fact that, there is a chance that the market could fall also once the desired, or rather I should say the much hoped for election outcome does come into play? And if that were to happen, would you be a buyer in that dip?
See, it all depends on what kind of results one gets on May 16th and how the market really reacts to it. If the market runs up, say 10-15% on that one day, clearly then over the next 6 months it may be difficult to make any further gains from the market. So then the portfolios will definitely need to get realigned. So it's all a question of how the markets really pan out. If the markets run up again in April and then again on the election day, yes, I mean very clearly then one would want to believe that markets are running ahead a little bit, and therefore one would want to alter the portfolio positioning accordingly. But I am not looking at it from just pure next 1-2 month kind of a perspective. Our view is that if we get it right, then from a 3-year perspective, it is a market to be invested in. Irrespective of what happens in the short run, there is going to be volatility, there are going to be phases, you're going to see your 5 to 10% corrections, but those are going to be buying opportunities rather than selling opportunities. It is going to be reverse of what has been happening over the last 3-4 years, where every rise was met with skepticism and eventually it gave way and markets fell back again. I think this is going to be a little bit of a reverse story building up over the next 3 years as far as I'm concerned.
Prasun, between IT and Pharma, is one better off still looking at IT? Large cap IT, mid cap IT, small cap IT stocks, with the exception of TCS, all large cap IT stocks are still trading in their teens when it comes to the forward PE multiple.
Our preference is going to be Pharma for one simple reason that we do anticipate a better earnings growth to come through from Pharma. While IT will do well, but the demand on the top line is going to be around 10-12% kind of a growth on an average for the companies, and if rupee does not support this year, then bottom line growth, earnings growth is not going to be very significant, maybe mid-teens or low teens. I think the Pharma, some of the names could give you better earnings growth than that. So in a growth kind of a market, I think market is going to chase something which delivers better earnings growth, and therefore I would be much better off playing Pharma. Moreover, the Pharma names are not going to be as susceptible to a rupee which does not depreciate. So if rupee remains at 60, I think the IT is much more at risk than Pharma, because the core growth on Pharma is looking much better. So I'd be more inclined towards Pharma than IT, but again it's going to be a stock specific thing. What I'm saying is more on a generic sector level call.